Good afternoon and welcome to my trade log. Today, my name is David Whiteley. It is November the 16th, and here's my results and commentary for today. Again, if you're new to the channel, welcome. This is a venue for myself personally just to document my trades and my journey. So nothing here is should be construed as financial advice in any way, and I'm sure after you're watching me for a little while, you're not, there's no danger of that. But I want to document the trades I'm taking, what I'm doing, my thought process, and any lessons learned on a daily basis as we continue to improve. So, as I think you probably saw by the thumbnail, it wasn't a good day today. It was a losing day, the biggest losing day I've had in a couple weeks. So it was a little frustrating. But the real question to ask is, did you follow your plan? I did follow my plan. The trades just didn't work out. So there's not really anything I can be really upset about. I feel overall my executions are getting better, although we'll look at it today. There were some opportunities that I just didn't see in time. And so that's going to be the focus. So let's get into the charts. All right. Looking here at oil was the culprit today. And, well, I don't know why it's not showing my executions on this chart. It shows it on every other chart except my oil chart. So I don't know. It's probably something that I've done. At any rate, this trade on oil is an inside bar break trade. And what we had in oil was we had this, I mean, huge sell-off. I mean, from the high until the low here was 213 ticks. More than $2. It's just huge drop off. And so, I haven't really back tested this sufficiently to know when you see this, does this change, does this market context, invalidate the trade? And my instinct was to say yes, to just stay out of it for this type of a trade. I mean, obviously if you'd have noticed an entry or found a way to get in early, that would have been amazing. As it was, as soon as this bar formed, I had an order on each side of it to take the break in either direction. It broke short first, which, in retrospect, saying, okay, we have a sharp drop off. I'm trying to take a long position. I mean, that just very counter trend, feels risky. The target. The other thing was these bars were big, so the target was, I think, 40 or 50 or something like that. Yeah, about 50 ticks. I think I have that a little short. So 40, 50 ticks. So we'd be looking for, I think 35 is the max that I was going to go for. And that's what we got stopped out at. So, it just pushed down. We got stopped out. Ironically, the second bar break would have worked just fine. That first one just did not. And that was the trade I took in the first session. The second session, this bar here, and I don't know. Yeah, I mean, if you zoom in, it's not quite a doji bar. There is a little bit of although actually, you know what, as I'm looking at this, I saw this as, no, it's an inside bar. It doesn't matter whether it's up or down. Okay. Gosh, okay. At first I was thinking, well, this is a down close candle, maybe, but that doesn't matter. I'm thinking of something else. Whew, sorry, it's been a day. So I took this trade as well. We got in long here, short, right? Which kind of makes sense. That's the overall direction. However, we are pretty overextended and it does pull back up before continuing lower and getting stopped out. So that one was, let's see. That one was there. Actually, this one I held to 20 ticks. I think I only let it go 20. Yeah, I only let it go 20. So I lost 20 ticks on that. So $200 and then 35, 350. So, we're 550 short there. So that was really kind of a bad start to the day. And that was oil. Let's touch on RTY really quickly. before we get to ES, and I had no trades today in NQ, so we won't even touch on that. And I did not personally take any trades in RTY. The strategy for RTY is a rejection of this gold line, 5-minute EMA, 5-minute 9 EMA, the 9 EMA off the 5-minute time frame. We don't take the third touch. We would be taking the first or second touch. It never touches. I mean, it gets really close, never touches. Doesn't quite get it here either. Finally touches here, would have pulled through for a stop out. Whenever I see these, I count this as a touch, even if I don't get into it, because it did come up to a level here close to where I wanted to get in before it obviously rejected, pulled up close, rejected. So just because it landed, 2 or 3 ticks away from my entry and I never got ticked in, I'm counting that as touch 1, touch 2, would not take this touch. This does, technically this closes on the other side of the line, which is a reset of the counter. So technically this is a good trade. So if anybody took this trade, this one looks like it worked out just beautifully. It paused here for a second, maybe gave you 7 ticks of pain and suffering before going to the 20 and beyond. So that one would have worked. So actually, ironically, RTY following the rules would have actually been a winning trade. But I wasn't really watching RTY. So let's jump over to ES. And the first thing I always want to look at here, I took several trades in ES. I ended up down a little bit more. We'll go through those. But the trade I want to focus on is the way I use this first hour. Now, so these are all my little shaded boxes here are time frames. Okay. So this is based on how ICT does his stuff, right? So we have the AM session, lunchtime session, PM session. I just do it this way because it makes it easier for me to see. And that's why I do it. Then this bar here, this is the first hour candle. So this is a strategy that I kind of put together for myself based on a bunch of other things. And it works out really well if you can find the entry. What I'm really struggling with this is identifying the entry as it's happening. When I go back in time and look at it, it's like 90% of the time it works. And so we're working on getting that dialed in. In this case, so basically what I'm doing is, if I were to look on the hourly chart, so if I go over here, go to the hourly chart, let me get rid of this box. Okay. I'm looking at, and I hate the way NinjaTrader does its candle timing because it always screws me up, which is one of the reasons I have the indicator on there, just to keep this organized. So this candle, as I hover over it here, this is the 8 a.m. candle. So this is the 9 a.m. candle. The 9 a.m. candle. See, it screws me up all the time. So the 9 a.m. candle, which is the candle that closes at 9 a.m., I think is how this is. Let's double check. So this is the 1500 candle, and it is, yeah, we're not at 3 o'clock yet Central Time. So that is it. So we're looking at the candle that closes at 9 o'clock. Okay. And I think I messed this up yesterday. Because these were the 2 candles I was looking at yesterday. If you drew the Fibonacci lines off of this candle, it looked really pretty. If you drew it off of the 9 o'clock candle, not so pretty. But anyway, so the strategy that as I have it is based on this 9 a.m. candle. And so the candle that closes at 9 a.m., we're going to draw Fibonacci lines off of that and look for the extensions. We're going to look for a pullback to the 70.5 level, ideally, and then a push through to basically a measured move of that candle. And it's, if the trend is clear, then it's easy to see, are we looking to go long? Are we looking to go short? Here it's a little trickier because the price action is essentially sideways. We're sort of trending down, okay? But if you look at, just from the open last night till now, it's really just sideways choppy. So one of the things, and I spent a lot of time today looking back at this, Because what we see here is price comes in at the beginning of this hourly candle, it pushes to the one extreme, pushes all the way back to the other extreme, and so basically we pushed, we pushed down and then we pushed higher than this entry point. From what I've observed, when this happens and you're ranging across it, then price generally is going to come back to the other side. Okay, now if it's if it's not, if it's more trending, then that's just simpler. So if we would have looked at this, and again, in real time, I was kind of going back and forth on this. And if we were to draw our Fibonacci levels out here, and I'm looking for 10 to 20 points on this trade is what I'm looking for. Oftentimes it goes much further than that. Okay, the candle closes, the 1 hour candle closes up here. We're looking for price to come down and come back and retest this 70.5 line, which is this green line, which it does. It touches it twice. Getting in on this line, we would have had to have our stop loss. 5 points is the most I ever really want on this. And 5 points would have taken us, basically to the high of day. So, that would have been pretty safe, I think. And in this case, it is choppy, but it does, if I'm trying to think, how should I have seen this in real life? Well, I should have seen price come here, come up, and then come back. And if we're looking at the 5-minute chart, it's a little more clear. And again, the reason I'm kind of running through this is simply, this is as much a sort of a journal, I guess, for myself as anything. All right, so if we're looking at the 5-minute chart, we pull up, we pull back. This 5-minute candle just touches it really nicely. I would probably want to get in on the break of this 5-minute candle. So I just want to see where my stop loss would my 5 points have covered it. And actually, in this case, I don't think it would have. Yeah, it would have stopped me out if we got in that late. But if we would have watched it, let's see, and said, okay, this candle closed. Let's go to the 1 minute and look for an entry. So this candle closed at 9:30. Which is right here. So the candle actually closed as it's coming back to, okay. So yeah, so that if we had followed that methodology, that would have given us a pretty clean entry, and we could have taken a break of this candle, which would have been very safe. And if we would have sat through this chop, where would we have got to? So that would have been right at the line. We easily got to the 27, which was 15 points. Didn't quite go 20, went 19, but if I can get 10 out of it, I'm pretty happy. And that happened really pretty quickly. So that would have been the ideal entry trade that I was looking for, but missed. In the moment, I wasn't sure, and I was kind of going back and forth. So I need to get better at identifying my bias more reliably. Because if we're looking for a long, see how it does the same thing. We finish here, it comes back here before pushing up. And if we were in long, which we may easily have been, and we would have got stopped out up here for a small gain, but probably not before it had already rocketed back. So tough day. Can't really fault myself for that. So we're going to learn from that. We're going to take that information. Again, I think looking back, this price action going from one side to the other of that range sort of signifies that the price is ranging like that, right? And so if it's ranging, it's going to return to where it's been, and that would be short. So that's that. Okay, let's look at the trades that I did take. I'm honestly I'm not too unhappy with my executions. If I had to say anything, and again, I guess my criticism would be that I wasn't willing to take the profits that were there. One thing I notice about my trading is I'm very quick to get out when it's running against me. I'm quick to move my stop up and take, just, a 2-point loss or a 3-point loss, which isn't much, but when you do it a couple of times, it adds up. However, on the flip side, I'm not quick to take, a 2 or 3 point gain. So right here, again, I was looking to get in short because at this point I kind of realized I missed my perfect entry up here. And so I'm looking for another entry. And honestly, this isn't a bad spot to get in. And if I was looking to hold, I don't have my Fibonacci lines up anymore, but if I was looking to hold till down here, I should have been willing to sit through this drawdown. We went to 4 points, so I would not have hit my 5 point. 5 points is typically enough, unless the market's really, really moving. But I got into this basically off of a break of this. We were kind of coming up, we were sort of wedging up, which we were, right? And it did break down, but it, got eaten right back up, and came up here. We tested up into this area, which, is a nice fair value gap right here. If I'd have been really kind of watching that fair value gap, we got our 45 period EMA, which is the equivalent of a 9 off the 5-minute chart here. Some kind of good resistance levels before it pushes down. So anyway, I was in this, got short, it shot down, and then it shot right back up. And I had moved my stop loss down moved my stop loss down. So I think I got 2 ticks or something out of that. I wasn't willing to really lose anything after it pushed down and came back up. And I thought, well, I'll wait for a better entry. I did the same thing here, right? We have a wedge break, essentially. I got in short. It looked like it was doing okay before it came back up. I went ahead and jumped out. And this is the one that, here we kind of have a test of, this is a 9 EMA off the 1-minute chart. We have a test of this guy, and I took a break of this candle. Again, my bias is short, and it wasn't wrong, but this was just way too choppy. And I had my stop loss up here, which I felt was a good spot. This logic probably isn't great, but I think I was looking at this kind of fair value gap here saying, well, if I have it above the half point of this, that's going to give it a little bit of room, but I wasn't willing to give up too much. And again, this is a case where I'm, comfortable giving up 2.5 points, but unwilling to take the 2.5 points when it gives it to me, as it did here. So again, we have a test, a drop down, and these are good. These are decent little scalpy moves. That was 6 points. So, and again, I'm just going through this as I see it. If we would have used this logic and said, I'm going to take a break of a candle, this one ended up coming down, 5 points. So it's easy to come back and say coulda, woulda, shoulda. And I'm not doing this for purposes of sort of, saying, oh, I missed it, but just say, okay, next time, these are the kinds of things I should look for. Confluence with, multiple areas of resistance to give me confidence, right? Here we have a fair value gap. We have our moving average. Here we have a fair value gap, our moving average. It looks like the bodies are respecting the CE, right? The consequent encroachment, the midpoint of this fair value gap. That's a good sign. It's also respecting this line. We could have taken a break of that, been in a much better situation. Instead, I got in here after the retest. I saw this come down. I saw price come back up, get pulled back down. I got in on the break of that candle. It pushed down. I thought we were doing great. Came back up, and I'd moved my stop to break even, got out. Again, waiting, and again, I got in late. So instead of taking a trade off of good resistance, I got in a candle late and ended up getting stopped out on a little bit of a pullback before it did continue down. And at that point, I just stopped. I did take one more trade later this afternoon. Yeah, right here, which this was another break. The line I was looking at was this guy here. I don't know, I had it drawn something like this. And so I said, well, it dropped down, it came back up, retested. I got in short, small pullback. And it really, after this candle, kind of wicked up, I got pretty nervous. So I waited for this and I got out sometime in here for, 1 or 2 ticks. And that was really it, for the day. I mean, we saw the lunchtime, the price action was pretty predictable. It's just really slow, right? So this is the same thing we seem to see every day, pretty much, where we have our lunchtime high and low. The PM session starts, price comes down here, takes the low, right? It goes just a little bit below the low of the lunch session and then heads back up. It just was moving so slowly. It was, not great. And really there was, let's see, if we draw this fair value gap here, right? This was the price movement that pushed us down. We pushed back through it, respected it, and came back up. So nothing, you can only, for me at least, I feel like you can only sit in front and watch this price action so long before you just kind of go cross-eyed and you're not really sure what you're looking at. So need some more experience with that. But that's what it was today. So I can't really, I didn't really make any dumb moves, I don't think. I really need to tighten up my sort of scalping moves. And if I'm not willing to wait for a 5-point pullback for it to go in my direction, I need to just get out with the small wins, and if I get, 2 or 3 points out of it, that's all I really should be looking for. But it's hard to do that in real time, to say, okay, I'm going to go ahead and get out real fast. I feel like you need that going in. You have to know, okay, I'm either in this to hold it or I'm in it for a short scalp. Because you got to make those decisions quickly. And if you hesitate, you're going to pay for it. So that was the day today. That's what I have for today, the 16th of November. So we'll be back at it tomorrow, Friday tomorrow. We had if we look at the daily chart, we were at the top of this, we'll see what happens overnight. We're kind of hesitating up here, so I'll be kind of curious to see tomorrow if we kind of come down to test this range before we either, maybe drop a little bit more or continue up would be my guess. I think there's probably still some upside here. Hopefully we get some movement though that can give us some wins and make back, you never should say that, make back the money we lost, but hopefully we have a better day tomorrow. So take it easy. Hopefully everybody followed your rules today, and we'll talk to you tomorrow. Bye-bye.